Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Thursday. I hope it finds you well. The Patriot Radio News Hour, 800-951-0592. That is our toll-free number. And get ready to call it. AllAmericanGold.com is the website. I'm going to jump right in. Silver is up another 63 cents, now bumping up on $25 an ounce. Yesterday, we ran a blow your doors off silver special. Well, guess what? We're going to blow up the whole car today. We're holding yesterday's price. This is when silver was 22 and change pricing. Rolls of silver eagles, $700. We are now like 80, 90, some places $100 a roll less than the competitors. Cases of silver eagles, $17,250. You buy 3 cases. That's not that much. That's 1,500 ounces of silver. If you buy 3 cases, $51,000, $17,000 a case if you buy 3 cases or more. And Jason, yesterday we were saying, hey, we're $2,000 less than everybody else. Well, guess what today? We're $3,000 less than everybody else out there. Take advantage. We've been telling you, listen, the silver setup is for real. And I know, right? People think, oh, well, why isn't it 30 yet? Why isn't it 40? Why isn't it 50? Don't worry. Be happy it isn't. Do you know what it would be? Right? You know how much you'd be paying for a case of Silver Eagles at 40? The setup is real. The inventory numbers in silver, we are in supply deficit numbers. And the amount, the supply deficit continues to grow here. This is a really good setup. We have the dollar now. Everybody, with the inflation data yesterday, we had more inflation data today. By the way, I'm going to fill you in on inflation here in a minute. But, Jason, it looks like this is going to be a rate hike and then another pause, right? A rate hike and another pause. And by this time, who knows how things shake out. But people are once again in the, hey, the Fed's almost done cycle. The dollar's been falling. This is why gold's rallying. Silver's rallying. And then when you look at the inventory situation, silver and platinum, which has had a big run this week as well, those inventory situations, major supply deficits for both of these metals, and I anticipate a very, very, very bullish setup, and not just for the rest of this year. You talk the next 5 to 10 years. This is really a sweet spot in silver, and now we're talking about. Listen, you're saving thousands of dollars from where everybody else is.
It's a great time to buy, Joe. Great time because the prices haven't really moved like they're going to move in the future. So you can buy it now. I mean. Things aren't going to get better in the next couple of years, Joe. Things are sliding slowly in the wrong direction. This is not a boom cycle we're in. This is a slow grinding bust cycle, which at some point it'll bust a lot harder than it is now, Joe. So it's like a slow motion car wreck, right? That's kind of what we're waiting on, and waiting for the actual impact.
Yeah, and again, this is something where here's what I love about it. You know what? And again, you guys know, I'm not a huge silver fan, right? Because I mean. 3 cases of silver today, $51,000. It's a lot of money. It's a lot of silver. The difference is, right, $51,000 worth of gold, right? You can put it in your pocket, and nobody would know, right? Your wife could put it in her purse. She wouldn't even have to take something out of her purse to put $51,000 worth of gold in there. $51,000 worth of silver. It's 3 shoe boxes, right? And in each case weighs about 42 pounds. So, it is bulkier. It is heavier. You're not going to put it in your wife's purse. But I'm going to tell you right now, this setup on silver, the inventory numbers keep coming. They keep getting worse and worse and worse. And when we start looking, especially at China, even though, listen, China's economy is a mess. It's an absolute mess. But the one thing that they're really now, they've caught up. They've caught up with the rest of the world on doing this solar thing, the electric car thing. It's incredible, the increase in solar and electric cars in China just in the last year. And Jason, it's put in huge pressure on silver supply. So listen, I think bad times are coming. But throw those aside. Silver doesn't need that. I think just from a supply-demand fundamental over the next 5 to 10 years, I don't see how we don't see a tripling of silver. Really, talking, $75 silver. I'm not out there saying, hey, silver's going to 500, 1,000. I mean, it could. I hope not. But I think we will see new all-time record highs in silver. The all-time high $50. Jason, I think that's gonna fall here in the next 5 to 10 years. Today is a great day. The lowest premiums now on Silver Eagles, going back to when COVID started. 800-951-0592. Jason and I, we're coming right back after the break. $800-951-0592. Joe and Jason, Patriot Radio News Hour on this Thursday. A quick look in here at the markets. The Dow's up 60. The S&P is up 24. The NASDAQ up 172. The 10-year note down to 381. Yeah, you heard me right, 381. On the 10-year note. Gold's up another $4, $19.65. Silver up 62 more cents here, $24.75 in the TV contracts, $24.91, so almost $25 on silver today. But if you're like, hey, you know what? I'm tired of the game. I'm going to take after the beating I took last year, and a lot of you are doing this because I know I was talking to Joey in general terms, and Joey was telling me, he goes, yeah, Dad, he goes, it's one of these things where people are like, hey, wait a minute, why, the NASDAQ's up big, the S&P's up, the Dow's up, why isn't my 401k doing better? Why isn't my IRA doing better? And this is kind of typical of Wall Street because you only have a handful of stocks doing all the lifting. Check out our friends at Y-Refi. Listen, fixed rates of return up to 10.25%. It doesn't change. Every month it's the same. The exact same. You know exactly what your return is going to be. Every single month, you decide what to do with the money. You want to take the profits, or the interest and use it as money. You want to reinvest it. It's all up to you, and there's no penalties if you want your money back. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com, or just call them at 888. Y-Refi 24. Now, we got more inflation data today. The producer price index. Okay, so this is the people that make stuff. It was down. It was down to 1/10 month over month. So that is even better. You don't remember CPI yesterday, 0.2 month over month. This one was 1/10 month over month. You take out food, energy, right, things that matter, well, then it's up 2.6%, and that would be a year year-over-year number. The biggest increase was food. Unfortunately, it's kind of a bummer, right, Jason? Because kind of need to eat food to live. And everybody's saying that the energy, which had been falling, this may be the last month of that as well. But some good news again. Why was the 10-year note down today? That was why, because the producer price index mirrored the CPI, and we got numbers we haven't seen in several years.
Yeah, I think that 10-year note, Joe, is going up as the trend. I talked to you, I think it was yesterday before, I watched a video that talking about how we may have higher rates, not just for now or a year or two. This could be permanent higher rates. We may be on a super cycle. So we'll see where the 10-year note goes, Joe, but it seems to me that when they correct these toxic assets at the 0% interest rates, which many banks and institutions bought in the last few years, once they correct it and they keep the interest rates up, they don't need to go back down, Joe. And we'll see how the economy shakes out this next tremendous downward cycle, because what happened the last 15, 20 years was not normal.
Well, you bring up something that I wasn't planning on talking about today, but we probably need to. Because what Jason's we're talking about the next cycle. People don't realize how things work. We were in a 40-plus year cycle of skyrocketing debts and falling interest rates. One of the reasons, how can you afford skyrocketing debts? Well, the best way to afford it is pay less interest on it. Right? Think about, go back to Paul Volcker, right? The height of the last inflationary cycle, and you're talking about a 10-year note pushing 20%. Right? Well, the debt was only $1 trillion. Right? So at least, okay, it's a lot of interest, but on a much smaller amount of money. For the next 40-plus years. And it wasn't a straight line. It's not like we went, straight to zero. But we were in this cycle where we saw interest rates continue to make lower lows and lower highs. 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 So let's face it, we spent, 15 years at zero. Remember, they were even talking about, dare we go negative? Right? Some countries had negative rates. That cycle is over. And now, logically, think about the pendulum that we always talk about. Usually what happens is these cycles, they go way too far in one direction. Obviously, we went way too far, right? Zero was idiotic. And we're going to pay for that. Buy that silver. I'm telling you, buy that silver. You are going to pay for that. We are going to pay for that. The pendulum is now swinging back. And we're probably logically would say, hey, we're probably going to see a prolonged period of interest rates that would be considered abnormally. And now, are we going back to 20%? Gosh, I hope not. I don't think so. The problem is interest rates at 5, 6, 7% seem incredibly high to people. Incredibly high to people. You know what's so funny right now? We've been saying, hey, listen, we're like everybody else. We see it in people when they're strapped for money, and we've had a lot of selling, which is great, fine, right? That's what it's for. But it's interesting what people are selling for. A lot of it around automobiles. People selling, I need I got a car repair bill. Fixing cars is no longer true. Going to the mechanic, it sucks now, right? You need 4 new tires. You got to break out $1,000, and that's buying the economic tire. People buying a car. Dude, I'm buying a car. Buying a new car. Oh my God. I'm a successful guy. I'm a successful person. I'm a successful woman. I can buy a new car. I'm successful. I've always bought new cars. And they go to buy them. And then they get told what the payment's going to be. And it's crazy. We've had multiple people just in the last month selling gold just so they can get a new car and, Jason, be able to afford the payments. I mean, this is what we're seeing here. And interest rates aren't done going up yet.
Yeah, that's correct. And the previous 40-year cycle before 1980 to 2020, which was a 40-year cycle of interest rates going down and money becoming cheaper, well, it was opposite. The last worldwide economic reset, they called it World War II. You know, look how that cycle ended. It ended with the Federal Reserve and federal income tax being placed in position in 1913, the Great Depression, World War I, and then finishing with World War II, and the entire world was transformed economically. So we're heading into that economic change. So Joe, the only thing that's different between the interest rates going up until, from the 1940s to 1980, interest rates were going up. Money was more and more expensive. I mean, in the 1970s, people were really panicking leading up to 1980, in the inflation. There's a difference here, and that's the Federal Reserve wants inflation at some level, constantly. That means gold and silver are going to be exponentially more expensive for the next years and decades to come. You'll see gold and silver at levels that are just astronomical. And Joe's talking about cars. Cars are just another indication of where all items, things, actual things. Money is an idea. It's fake. It's a transfer of wealth. It's how you can, sell your goods at your business and then buy the things you need for yourself. It's just currency. But it's the things that you actually need in life, like a car. Gold and silver, which is true savings. These things are going to go up and up and up and up. I can't remember how many people I've heard over the last 5 years, Joe, talk about a gold super cycle. Well, what they're seeing is this great economic reset, and then just years of more expensive money. People are actually going to have to invest wisely now and actually be smart about where they put their money in the next years, because you're going to have to earn it now. It's not fake and easy anymore, right, Joe?
Well, yeah, and we've had a fake and easy money, right? Wall Street's been fake and easy. It's not going to be fake and easy anymore. And I'm going to just point out to people, it started in the 50s and ended at 1971, when all of these central banks were saying, here's dollars, give us gold. Right? Richard Nixon closed the gold window. This has been happening since about 06 or so, 06, 07. Central banks are piling into gold. Now, the difference is the gold isn't coming from America, right? The gold's coming from the gold stockpiles, and the same thing with silver. We talked about the silver stockpiles. But gold really took off, right? After they closed the gold window, gold got to trade freely here. Jason, we haven't hit the takeoff point yet. But there's something else happening. Not only are all these central banks buying, they're now no longer trusting the United States, the UK, France, right? They're not trusting them to hold their gold either. All of this repatriation, 85% of the 85 sovereign wealth funds that exist, and 57 central banks indicated that price inflation will be higher in the next decade than it was in the last decade. Remember our pendulum swing. They said that the funds and the central banks are now trying to come to grips with inflation, and they're saying the biggest thing they're doing, adding to their gold holdings, and Jason, reallocating their gold back into their own countries as they fear that as this inflation rises, sanctions, things that the U.S. has been using, the Russia thing is one thing, but now they're all saying, hey, we think there's going to be more desperate attempts by what I'll call the traditional access, right? The U.S., the UK, France, Germany, right? The G7, if you will, that as inflation continues to spiral and they continue to turn away from the dollar, that they no longer can trust to have their gold held by these nations and bringing it all home. That should tell you all you need. Silver is going to be spectacular. 800-951-0592.
Hi.
$800-951-0592. Patriot Radio News Hour. Joe and Jason on this Thursday. Silver yesterday was up $1 plus an ounce. Right now, up another 67 cents an ounce. $24.80. TV gold, which is TV golds. They're in the most actively traded contract, which is September, $24.96. So let's just call it $25. The next contract, December, $25.30. Going into 2024, $26 in change in 2024 already. Yesterday, we ran a huge silver sale with silver up $1 an ounce. Today it's up again another almost $0.75, right? Same price. Rolls of silver eagles, $700. Go look around. Do it. $783, $785, $790, $800. That's what they're charging out there. A case of silver eagles, $17,250. Buy 3 cases or more, $17,000. We are $3,000 a case less than everybody else. $3,000. Do you know that every $500 is an ounce? That's $6 less when you buy a case. $6 less, right? That's like silver being almost $31. I mean, that's how great of a deal this is. I can't emphasize it enough. If you're one of those guys that, hey, I'm a silver guy, I've been waiting for silver. I know you may have been a little frustrated. Obviously, probably feel a little better over the last few days. Silver hasn't even started yet, guys. It hasn't even started yet. Take advantage. I don't know, Jason, that there'll ever be a special like this again. It's incredible that we can be this much below all the major online guys out there. 800-951-0592. But again, this cycle, this rate hike, rates are still going higher. But, Jason, we're closer to the end than the beginning, and that's when the run really starts, doesn't it?
We're closer to the end than the beginning if inflation doesn't pick back up. And that's going to be an exercise in whether they're going to start printing money and when they're going to start printing money again, Joe. So that comes down to the recession that's coming and everything else. The timing of everything dictates what they'll be doing. So Can you imagine if we have a recession, Joe, and they're still moving rates up because there's inflation? Can you imagine that sort of a situation?
I'm going to say this. This is how dumb they are. I'll guarantee you they'll raise rates with a recession already starting because they're that idiot. They believe they're fake numbers too much. By the time they realize what's happened, it'll be too late. But let's talk about yesterday's number. I just want to give you a heads up. How did it get, I guess, so low? Right? And I'm using air quotes here. I don't know that 4.8% is so low. The 3% number, right? Oh, look how 3%. Right? Well, that's 50% higher than what they promised us. But let's look at it. Year-over-year energy prices down 17%. So that was a pretty helpful. Which we know this not going to. Have you seen oil prices? Matter of fact, Brent crude's back above 80. NYMEX crude today almost $76. I think that's probably near the low. I don't think we'll see that, but there was something else that I didn't know. I knew that part yesterday. We knew because you can see it at the pump. Hey, gas was a little less. Health insurance adjustments. What? What do you mean health insurance adjustments? The cost is the cost, isn't it? Well, yes and no. Yeah, you may be paying more, but we're going to make an adjustment anyway. Cost of the health insurance adjustment pushed down CPI health insurance on a year-over-year basis. You ready? 25%. Yes, did you guys know this? Did you know your insurance bill? It went down 25%. Wait, it didn't? Oh. Wait, you paid more? You're paying more this year than last year? I know. I just told you about mine. Mine went up again. But in the Federal Reserve world, there was a health insurance adjustment that Jason miraculously just poof. On paper, health insurance went down 25%.
Well, it's all in the numbers and how you look at the numbers. I mean, it sounds like what happened is the rate of increase in health insurance was down 25%. Is that what they're really saying, Joe? The amount it went up versus the previous year was 25% lower? Is that kind of what they're skating around? That's what it sounds like.
Not even that. That would be giving them, like, okay, at least they're trying to be someone. No! Based on this adjustment, what the Federal Reserve and the BLS and all their data collectors said, well, when we adjusted the health insurance this year, this month, so June of 2023, you paid 25% less than June of 2022. That did not happen. Didn't happen, but hey, we're going to do it anyway. Now, I make fun of it all the time, right? All of these numbers, they don't actually track inflation. Because they know, well, gosh, if we actually track inflation, people would be like, oh my gosh, we wouldn't have been talking about 8%, 7%, 6%. We wouldn't have been talking about it. Everybody knows. Inflation would have been 15 to 20%, which of course would have meant what? Gosh, we got to raise by several points, right? Remember, we're going to raise 3/4 of a point. Then it went to half a point. Now it's 1/4 of a point. My ass. And this is why, unfortunately, to Jason's point, inflation's not going to keep falling because all of these little adjustments. Here's the funny part, is in a few months, they're going to adjust it back, and it's going to start piling back in. All of this, it's just a bunch of nonsense. But again, remember why they do it. Social Security, COLA payments, right? They always make these little adjustments because the 3 months for Social Security, they want to pay you the least amount as possible. They wouldn't do that. No, they love you. 800-951-0592. Jason and I coming right back. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour. The biggest Silver Eagle sale in years for sure, without a doubt. I can honestly say I don't ever recall. And Jason, this is year 5 or 6 for you. Can you recall any time where you had silver go up almost $2 an ounce? And we lowered prices by over $1,000 a case. I mean, have you ever seen that before?
No. In fact, in the last few years, especially last year, there was a lot of situations where silver went down and the price stayed the same or went up, right, because the premiums were out of control.
Right. I'd be like,
that's what we've been dealing with recently.
Right. How many times silver's down $1? Unfortunately, silver premiums went up $2. Right, and the price would actually be higher. It's an outrageous opportunity. Only here at Patriot. Rolls of Silver Eagles at $700 a roll, $80 to $100 below the competition. Cases of Silver Eagles, $17,250 for a case. Buy 3 cases, $17,000 if you buy 3 or more cases, and that puts us $3,000 plus below the competition. That equates to over $6 an ounce. You know, when we talk about just a roll, when you're talking about $80 to $100, that's $4 to $5 an ounce less. That's how big the opportunity is at 800-951-0592. This is another thing. This one really blew me away. Car insurance. Get ready. Here's a big warning to everybody. Car insurance is going to go significantly higher. Allstate jacked up premiums in Georgia by 40%. Nationwide increased insurance. This is car insurance by 32% in California. State Farm raised 11% in New York. They're saying that car insurance rates need to go up by a minimum of 10%, if not more. The Bureau of Labor Statistics, which, we talked about the inflation rates. Let me tell you what they're talking about. S&P Global said car insurers lost an average of 12 cents for every dollar of premium written. The worst part was, it gets worse, State Farm lost 28 cents for every dollar of premium written. Posted a $13 billion underwriting loss for its auto arm. And here's what they said. Hey, it's not our fault. Not our fault. Your insurance is going to skyrocket. They said soaring repair bills, larger medical bills, higher litigation costs. These are all the reasons that our premiums are all going to need to rise. And Jason, it doesn't matter who the insurer is. These are things that, hey, we know everything costs more. Now car insurance, apparently, that's been right. Just to give you an idea, listen to this. They're saying that car insurance year over year was up 17%. And they still lost their backsides on it. I don't think 10% is going to do it. My guess is I wouldn't be surprised if next year you see year over year car insurance up another 20%. That seems to probably be where the number needs to be.
Well, I remember in 2021, the number one asset class for profit was used cars. Remember that? And so what happens to a car insurance company when one of those gets into a car wreck? And that's a used car, and the new car prices are astronomical. So obviously, just based off the price of the cars and the parts to fix it. Remember, we had all those shortages too. Remember that? All that makes the cost of cars more expensive. And insurance companies aren't there to just give you money for free. So I don't see anything since COVID, Joe, that's made cars cheaper in any fashion. So the car insurance should just be more expensive every year until things really actually stop. You called for demand destruction a couple of years ago. You're saying that's when this thing really will slow down. That might be when car insurance finally goes down. But we don't have demand destruction right now. There's still people spending money, and there's still just a lot of economic activity, and the prices of things are still going up.
You know what's funny? You know what they didn't list? Which I was shocked, because I was like, oh, well, I think I know why, right? They didn't say the price of the car. That's not why. Yeah, new cars are more expensive. Used cars prices have been falling. They didn't mention the price of the vehicle. No. It's the price to fix it when you get in an accident. It's the price of your health when you go. Hey, I got in an accident and I had to get physical therapy. I had to go to the hospital. It's the cost of litigation, right? It wasn't the price of the car.
Manpower is a lot more expensive. just look at any service-driven industry, right, Joe? The prices for manpower have gotten very expensive. So that makes a lot of sense. Yeah, that's probably those are the number one causes for that to go up. But let's just face it,
shocking,
all of it's
right?
more expensive.
That's not kind of what you would think,
right? That's all more expensive. All of it is.
Don't worry.
I can't.
Hey, inflation
was
only
down,
3%.
Right? Oh, yeah. 3% year over year from 9% the previous year. So, of course, that number's lower than a year over year of 7%, right, Joe? Of course. It's all in the numbers.
$800-951-0592. Joe and Jason were running the Silver Eagle. It's an incredible opportunity. I'm going to make it maybe a little better, maybe not. If you're buying cases, these are going to be sealed cases. So this isn't, no offense to the other companies out there. They're cheap silver that were $3,000 less, and a lot of them are not sealed. They've been picked over. They've been all the nice ones have been removed, and they just sell you the rejects or what have you. We don't do any of that. These are sealed cases. You can also specify if you'd like a 2023 case. We can do that for you as well. So if you want a sealed case of 2023s, just let us know when you're calling. Again, rolls of Silver Eagles, $700 a roll. Cases of silver, $17,250. Buy 3 cases or more, $17,000 at 800-951-0592. The Dow's kind of losing some of that steam. At least right now, it's early. Who knows? The 10-year note, Jason, all the way back. 379. What a difference 2 days makes. And again, these bond yield spreads really spreading out the yields here. Again, I think this is kind of the last hurrah on say 10-year note below 4, because I think when August rolls around, and the fact that they've got to sell these longer dated maturities, but take advantage. I guess if you're looking at locking in a mortgage rate, today may be the day to do it. I don't know, but it just interesting because you kind of see how we got the lower inflation. It wasn't quite as genuine as it had seemed, was it, Jason? With this adjustment to health care, saved a bunch on energy. Both of those things look like they're going to reverse itself. And then, of course, car insurance, right? That's another. You got to have car. At least I don't know about every state. In this state, it's illegal You can't be driving well people do it, but yeah, it costs a lot if you're getting caught without car insurance.
Yeah, another one of those things where I guess it's good. I guess the laws for car insurance are good, Joe. I mean, it sucks to be the guy that gets hit by somebody without insurance, and then you can't get your car paid for, your injuries or anything like that. But it's everything we've talked about today. It's just one example after another as to why you need to save. You need to save for that rainy day. You need to save for economic extremities that are happening every day, right, Joe? Banks closing down and recession on its way and all this stuff. The customers that come into Patriot and buy their gold and silver are some of the most relaxed people I've ever met, because financially that's one less thing they worry about as much as the average guy running around just barely making ends meet. You got to do savings. You got to practice savings. You got to exercise savings, and gold and silver is the best way to protect your savings, because if you just throw it in a bank, Joe, there's several different ways that it's being taken from you.
Yeah, well, I'll say this. It doesn't stop, right? They have all the tricks that they literally make the organized crime guys blush with how effective they are in slapping the big on you and pretending that they don't. 800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.